Hi, everyone. I'm Chris Pete Swanson, Chief Financial Officer at the Community Foundation of Greater Des Moines, and I'm joined today with our investment consultant, Elizabeth Monticelli from Mercer. Elizabeth works primarily with foundations and endowments like ourselves, and we had a big day today. We had our investment committee meeting in addition to our investment donor session, right? And so thought that it would be a good idea to get together and let's talk about it and see kind of
Great.
what's going on.
Yeah.
Yeah. Well, thank you, Elizabeth, for
Good
joining
to be
me.
here. Thanks, everybody.
So let's start big picture. How would you describe the markets for 2025?
Okay, so looking back at last year, you guys had a great year. All the funds did really well, but the markets didn't start out that way. We had that deep seek in the beginning of the year, and then we had Liberation Day in April. And the markets plummeted. We had significant volatility, but somehow the tariffs didn't impact as much. As there were a lot of deals made. We had 3 Fed cuts at the end of the year. We had the passage of the One Big Beautiful Bill, so there's going to be some deregulation, some growth, some tax refunds. So there was a lot that went on throughout the year, and the markets just continued to chug along. We didn't have a huge Santa Claus rally or Christmas rally, but they did really well. All the markets were up. It was just tremendous returns for all the markets, U.S. and international.
Okay. So how did our portfolios do?
You posted some great numbers. So the long-term growth portfolio did 16.4% for the year. The index portfolio did 18. It's got more in the S&P 500, and so it's a little bit more aggressive, and it did an 18%. And then the moderate did a 12.8%. So all good numbers. I think the long-term growth portfolio that you told me in today's meeting hit a high at $477 million.
Correct.
So that was like the highest market value.
Yeah. Yes.
And then we went and talked real quick about January, because we had a good January, and I think they're up another 2.5%.
Yeah, it's amazing.
Despite Venezuela, despite everything that's happening in the market, it's still positive and hanging in there. So we're really excited.
It's amazing. What would you say the overall economic backdrop is right now, and what are you keeping an eye on as we think about 2026?
So there's a lot. But we do think, in general, I'll step back and say, we do think it'll be a good year. We do think GDP is going to be positive. We do think the economy is going to be positive. There are a lot of risks out there, and we went over that with the committee, and the committee pointed them out as well. Geopolitical risks, inflation we're watching closely, and jobs, because we're watching growth, but we've had plenty of growth. The jobs number just came out 2 days ago, very good. I know that last year they did take some numbers off of it, so it wasn't a big jobs growth year last year, but we still have this strong economy. And then we did also talk about the new Fed chair, the possible one, Warsh, how he's been nominated by the president and his impact. So watching inflation closely, interest rates closely, again, the geopolitical risks, but we just think everything should be all right for 2026, just there's still that usual level of uncertainty. The one thing that we had last year, I'm not sure we'll have this year, is significant dollar depreciation.
Okay.
The dollar fell so much that the international equities really outperformed, primarily because of the dollar drop. And they were up like 35% for developed and 25% for emerging markets. And those are in the long-term growth portfolio index. And moderate have a little bit in the moderate, but the other portfolios really benefited from that. I don't know. I know that the administration wants that weaker dollar. It does help with exports, and it does help your international equities. But we had such a drop last year. I'm not sure how much we'll get this year.
Okay. Great. So thinking about the investment committee, and there was a lot of conversation, what stood out to you most that was discussed?
So you have a very smart
Yeah.
investment committee. You have some great individuals on there that know the markets and are in the markets. And the number one topic is no surprise, it's the concentration in the S&P 500 and the Magnificent Seven. So we talked about that, Mercer's view on it, and I think it's reflected in your portfolio, says you need to remain diversified, globally diversified, and you need those international developed stocks. You need those emerging market stocks, not just the US S&P 500. So the committee talked a lot about that, and they do have a small quality tilt and that small cap value tilt that should help when we have rough downsides, not huge tilts. So that was the main topic of conversation, and taking a step back and looking at how diversified the portfolio is. And the second item, which was great, and it's very I don't want to say trendy, very important right now in the markets, is private debt. So the whole committee talked about private debt, how does it fit in the long-term growth, is it illiquid or not? They're always watching fees. The fees are a little bit higher on private debt. And then they're always watching liquidity for the underlying agencies. And I think that there are evergreen vehicles being offered now in private debt. So we had good discussion. So those are the two main topics from today's conversation.
I know for sure I learned a ton just out of that conversation. Well, thank you, Elizabeth, and thank you for joining us. Appreciate your expertise. It's invaluable. And have a good rest of your day.
Great. Thanks, everyone.